Hi everyone, and welcome to Traders Talk. And today is 31st of January, and today is the last day of January. Let's see. Okay, I'm your host Ming Hon, and welcome. And this is our uh, third. I think it's the third show for the year after a break of last week for Chinese New Year. And for those who are celebrating Chinese New Year, happy Chinese New Year, and wish that the prosperity God will reward you in this rabbit year. Yeah, on the stock market. Okay. All right. So for those who have just joined us, give me a thumbs up if the audio is okay, and if you are ready for today's show. Yeah. Today's show is a bit significant because this is actually what a lot of people are actually waiting for. It's actually the golden crossing, and we will explain shortly later on what is this golden crossing about. Yeah, and yeah. Okay, so so far in January, if you have actually followed us in our newsletter or in our previous show, so far the year actually started off quite bullish, yeah, quite bullish, and of course, from a bad year to a good year, it is actually nothing too great to actually shout about, right? Unless you are just starting to actually come in to invest or to trade, then of course this is actually something which is actually very excited for you guys, yeah. But of course, for for seasoned traders like us, I mean, it is just another month of market movements, another month of market movements, and of course we cannot predict the market where it will actually go, whether this month it will go up, whether the next month it will go down. We would not actually know for certainty, but of course there are certain things that we do use to actually help us make decisions whether to enter into any trades, or whether to actually take in any trade positions, sorry, investment positions, yeah. And of course right on till I think towards the end of December, when the market actually came down, right, we also took on some long-term positions in some great stocks, yeah. And maybe later on we will also share with you why we actually made those decisions to actually add on these stocks, despite the market still actually coming down, right? It's actually having a downtrend, but certain things in the market are actually having a shift, and of course this shift would actually come in the next days. In the next days, we will also know whether there is actually a bigger shift to the market, which will actually give it a turnaround from a bear market coming on to I won't say a bull market, but a bull in the making. Yeah, a bull in the making. All right. Okay. So let's go in to actually look at some of the charts, and of course what actually happened last week, and what we are actually expecting to come about this week. Yeah. I think traffic is actually starting to become quite bad. Last week, the I'm from KL, right? I mean, traffic was actually so good, right? I mean, there's practically nobody on the road. But of course, today itself, the traffic was actually horrendous. Everybody actually started to go back to work, right? Go back to work, and of course that is actually not something very nice. Okay, yeah, this is the S&P 500, right? S&P 500 index, right? Okay, so if you have actually looked at the previous trend, right? We actually drew out this trend, right? Where this trend actually started off early in January 22, right? Early in January 22, where we actually started to have this thing here. Let me just put it. Where we actually started to have this downtrend, right? Downtrend, which why is this okay? Downtrend. Okay, here. So we actually started to have this downtrend somewhere early January, right? That actually started when the Federal Reserve started to actually put in their monetary policy to actually increase the interest rate, right? That actually brought down the market. Over here, basically, the Fed was actually printing money, and basically the market actually had a big bullish run during the COVID times, and in January 22 itself, the tightening started, and of course that brought the entire market down. Yeah, and of course the whole downtrend, right? Basically, we were actually looking at almost about towards the bottom, right? Towards the bottom, we actually went about 30% down, right? Yeah, let me just put this here. Yeah, from the top to the bottom here, right? We actually went almost about 28% for S&P, and of course for Nasdaq is actually 30, much higher, 30%. Okay, so that actually brought the market down, but throughout the whole year, right? We actually kind of like monitored the certain patterns of this downtrend, and of course this started here, right? Then of course, firstly, I mean, when it goes down, it don't go down in a straight line. Right? It actually go down, go up, go down, go up, and of course, the pattern which was actually observed is when it actually retraced up, right? This one level here, and subsequent it also formed another level. And when we actually drew a line down here on all these line, right, a best fit line, we actually managed to actually look at this so-called resistance trend line, right? Resistance trend line, and this resistance actually continued to hold quite strongly. So this was the first time, this was the second time, and here was actually the third time here, right? The third time here. The third time was here, yeah, and then subsequent the fourth time, yeah. Although it breached up slightly, then subsequent it actually came down, right? And of course, the last week, right? This was the week before, and actually last week, right? What actually happened is that the market actually, the price actually breached above this trend, above this trend line, and that was actually quite strongly, because you can actually see in the past either 1 or 2 days it actually came back at close below, whereas last week, the whole of last week, it actually closed above, right? Closed above. Okay, and of course yesterday itself, the market had a sell off, and of course that was also because there is also, besides this trend line, right, there is also one small resistance level at this 4,100 level, right? 4,100 level, where the price actually slightly touch it. This was highest was 4094. 4094, yeah. So it didn't even touch it. It actually went down already. But this was actually the level here, which was actually about 4,001. 4,001, yeah. And then yesterday itself, the market actually went down about 52 points, one over percent down. Yeah. So whether the price can actually continue to breach this level and continue to actually go up, of course, it is going to be a question mark. Yeah, but of course, the market is actually also looking at some other indicators, right? Some other indicators, which is actually what we call the moving average lines, right? Okay, so the moving average lines, this is actually just the simple moving average lines which we actually put in here. The red one is actually the 50 moving average, and then this is actually the 100, and then the yellow one is actually the 200 moving average. Okay, so one thing about technical analysis is that whenever a short-term moving average crosses a longer-term moving average, then that actually also shows a change in, can actually show a possible change in trend, right? Change in trend. Yeah. So this red one, if you can actually see here, right? Yeah, if I make it bigger, right? If I make it bigger, you can actually see that this red one is sloping up, right? And this is sloping down because of the down market, right? So this is actually going to touch and cross this 200 moving average. Of course, yesterday drop did not help this to go into the direction which we want faster. Yeah. But of course, once it actually crossed, right, then of course that would actually give the market a lot of good feel and good sentiment, right? That basically we are at the end of the bear market, and we are actually going into another new cycle, which is going to be a bull market. Yeah. Yeah, and of course the other side, the other time when you actually saw this these two line crossing, right, was actually after when the bear market actually started somewhere here, right? Yeah, you can actually see here, this was January, right? So somewhere here in March, right? In March, the 200 moving average was actually sloping up, and then this red line actually cross from above, and of course this is actually a very bearish crossing, a very bearish, a killer cross, we call it a killer cross. And of course, once that crosses here, right, then you can actually see that the market actually had a very steep sell off here, right? Quite a steep sell off here. Yeah. Because this is actually how to say, a bad indication that of the market is actually coming down, right? Then of course the market actually came down, and then you can see that the 200 moving average started to actually slope down all the way until now, right? All the way until now. And now is actually the inverse of what happened somewhere here in March. The crossing is actually crossing back above. Yeah. So of course, hopefully once it actually starts to cross, then the prices can actually go up, and that's where the 200 moving average will also turn its direction to the other side, right? Yeah. So this of course would need to be supported with a couple of things in the market. I mean, prices won't, I mean, basically if you talk about the market, right, basically market is all about emotions, right? Emotions. Besides all those economic data and all these kind of things, right? I mean, the economic data also puts in emotions to the market, right? And of course, when people are how to say, are bullish, right? I mean, how to say, they will just tend to buy, right? FOMO. A lot of people starting to actually FOMO when they actually see this line coming up, right? But of course, that's not also the time where we actually start to jump in. In fact, if how to say, if you monitor the markets, right? If you monitor the markets, that's the time where some of us actually starts to actually take profits from here. Yeah, before the retail investors actually comes in, right? I mean, some of us would have already taken some profits on our position when this was actually going up, right? And of course, there's possibility it will come down a little bit before going back further up. Yeah. So of course, if you suddenly jump in right here, or even last week, if you have jumped in, maybe some of your positions, if you are trading, right, would already have been stop close to stop out, close to stop out. If you are using this candle as a lowest point, as a stop loss candle, right? Yeah. So again, Wednesday, the Fed is actually going to do the rate hike, announce the rate hike. Consensus 25 basis point, but the more important thing is what is the expectation going forward. Yeah, whether the Fed is actually taking this as the last hike. I mean, based on the previous um, discussions and things that the Fed chair has said. Yeah, this is how to say, going to be the probably, yeah, if the economic data supports it, then they will actually stop at uh, this height, and then basically from there they will actually monitor the inflation rates and the economic data to see how long they would actually need to maintain the rate at 5%, right, slightly above 5%. How long they will actually maintain it before they take the decisions to actually cut down the rate. Yeah. So of course, during this time, right, where the rate is slightly above 5, right, that's also a time where we need to actually see how sustainable the companies are, even for these few months, right? Or I mean, not for these few months, but for the past year, right? When the rates actually started to hike and at the highest point after Wednesday, right? How long they can actually sustain their business if the economy slows down and goes into recession, right? How long can they actually sustain with the cash they have, with the business they have? If they are borrowing money, that will actually make it worse for them, right? That they would also have a burden to actually service the interest at this high rate. Yeah, and of course we also saw that some of the companies have already started to be shaky, right? I mean, companies like Bed Bath and Beyond have already announced that they defaulted in the loan, right? In the loan, and of course, more of this can actually start to come. Yeah, so that's one thing which we actually need to monitor. Yeah, despite the indicator crossing above, right? The market can still go sideways until these things are a bit clear, that the business environment, the businesses, the corporates earnings are sustained, or are sustained, and they basically don't go negative. So far, the earnings season has actually started, right? And so far, the data is actually quite mixed. But most of the what is that companies, right? Companies have actually cut down their growth forecast, reduce their growth forecast in expectation that the economy will actually sizzle down. Besides that, they have also started not started they have actually also implemented, a lot of them have also implemented job cuts, right? Job cuts. Google has done it, Microsoft has done it, Amazon has done it, and many more companies have actually done it. Yeah. So those things would actually, the effects of those things will actually come in the following months. Yeah. So that is the thing where we actually need to monitor, despite the indicators doing the golden crossing, 50 crossing the 200 moving average. Yeah. Okay. Yeah, so this is the thing. Yeah, today itself, I think earlier in the morning, I saw the futures is actually slightly down, right? Slightly down. Hopefully, I mean, personally, for me, I do not want it to actually go up so fast. I don't know about you, is it? I would want the what is that, the market to continue to actually further come down more, right? So that I can actually invest and buy more shares, right? I mean, at cheap prices. Yeah, especially when these kind of things how to say, give a bit more certainty that that probably the bottom has been reached somewhere here to about 3005, right? Yeah, and then that's where it would probably stay above this 3500 level. And even if you actually buy shares, right, even if you actually buy shares when the market is choppy, right, it also gives you a bit more comfort that even if it goes down, right, the risk to the downside is actually smaller than the risk to the reward to the upside. Yeah, the reward to the upside. Yeah. And of course, with that, right, I mean, for the past few months, we have also been adding positions, which we have also shared with you guys during our traders talk, right? Some of the positions which we have actually entered during the past months, and we do not enter it at everything at one time. We actually also stagger the investments, right? The investments during different times. So even though let's say if you have actually missed buying shares during here, right, when it was actually almost at the bottom, right, it's still okay. It's still okay because at the end of the day, there is no one best time for you to actually go into the market. Every day is actually an opportunity, depending on whether you know how to actually get it. Yeah. So of course, this was actually the bear market, and of course, if you actually turn into a bull market, right, then of course the way we actually buy shares, right, is actually buying on each of the dips. Yeah, each of the dips going when it's actually going up, right, we actually tend to add shares when the market dips, right, the market turns. We never buy shares for investments, right, when the market is actually going up. We never buy at the high. You need to be a bit patient. Do not FOMO into getting into positions just because you say that the market has actually turned bullish. Yeah? Because there is always chance that the market can actually come down. The same thing, I think, if you have actually saw some of the stocks, right? Let's just put okay. So it's the same thing. If you have actually monitored some of the stocks, like the China stocks, right? I mean, I think way back in October, November, I mean, if you follow our shows, right, we have already spoken about China on the Hang Seng, and then some of the notable positions which we also took in and we shared with you guys, right? So during that time, of course, I mean, nobody, how to say, when things are, how to say, when things are not good, right? Nobody wants to actually go in and look for potentials, right? And when things are shown that the market has actually gone up 30, 40, or 50%, right? That's the time where the retailers starts to actually come in, right? And if you see here, right, if you see this is Baba, right, Alibaba, right, if you see here, right, I mean, a lot of people probably would have been actually caught during here, because this is the time when the media starts to actually talk about oh, the China stocks is back, there is no more lockdown, it's actually very bullish. In fact, things actually started to happen at the bottom here, right? At the bottom here, things started to already happen at the bottom here. Yeah. And during this time, nobody talks about it. Don't buy China stocks, don't buy Alibaba. Alibaba is going to go to zero, right? Yeah. So for those who knows how to actually identify opportunities, they would probably have actually started to take in positions right at the below or somewhere around here, right? Somewhere around here. And of course, during these times when it pop up here, some would have actually taken out their profits. In fact, for our position for Baba, I think we took profit somewhere around here. Yeah, I think we also shared that with you in our newsletter, that we took profit out from our Baba positions. And of course, right now, for it's not a great time to actually enter. We would actually let it retrace back a little before taking on more trade or investments positions. Yeah. Okay. Yeah, and of course, this actually came down today. Today, I think since yesterday itself, most of the Chinese stocks has actually came down. Hang Seng was red for the past 2 days. For the past 2 days, Hang Seng was in red, and today itself it dropped another $1. Yeah, and hopefully it will continue to come back down so that it gives us more opportunity and so-called also safer entry trades. Yeah, because when it's so high, right? uh, I mean the likelihood of it actually coming down is bigger. You see that the stochastic is actually all way above 80 for over a month or for over 3 weeks, right? For over 3 weeks, and you would not know at which point of time it will actually pop back down. Yeah. So of course it started to come back down, retrace yesterday, right? Yesterday, and hopefully it will. This would actually come in. I would say maybe somewhere around this level, right? 20,000, right? Yeah. 20,000 would be yeah. I mean 20,000 would actually be quite a steep decline, yeah, steep decline. But of course, if it comes here, then of course this would be actually a good level. And even if it don't come, right? I mean, you can actually see at this level, monitor the market, monitor the market, and monitor the price action, right? Price action, and of course, if you are trading options, right? If you are trading options, and we have also shared in our newsletter how you can actually trade options on the Hang Seng Index. Yeah, if you have not uh, if you do not know about it, go and look at our newsletter which we issued yesterday. How you can actually trade options in Hang Seng. Yeah, and of course, like I said, if the price don't come down to this level, right? But of course, if you are trading options, right, you can always structure a trade using options at this level. Yeah, we even though the market is actually still trading above, right? Then you can still structure out an option trade. You can actually enter an option trade at a lower level, which actually gives you additional buffer. Yeah, we have also shared in the newsletter what kind of trade structures which we have been trading on the Hang Seng Index. Yeah, Hang Seng Index. Yeah, and we have actually done this since somewhere I think after it confirmed the breaching 16,000, we have actually started already putting monthly positions in options, right? Way out here, because it moved too fast. Then of course, the positions for March onwards. Yeah, we had positions up till March, I think, up till March. Yeah, so the positions for April we have not managed to put. We are waiting for a retracement, right, before we can actually put in more positions to actually write this thing up. In fact, it has actually already gone up by quite a lot from the bottom here, right? It has actually gone up by about 50% from the bottom. Yeah, but of course, if you look at the highs, right? The highs, then of course there is still a long way to actually go for the market. The highs is way above 30, right? At 30,000 here, right? This was actually somewhere in 21. Yeah. Yeah. So now we are only probably uh 20,000. So there is another 10,000 10,000 to actually move back to its high. Yeah. So this is actually Hang Seng. Then of course the other one which we are also uh doing is actually also on this index. It's actually the Hang Seng Tech Index. Hang Seng Tech Index, and basically this is the index tracking all the tech companies listed on the Hang Seng on Hang Seng. Yeah, and of course, similar to the Hang Seng pattern, right? The Hang Seng Tech Index has also moved up by quite a lot, all the way about 76%. 76%. Yeah, so it's even higher than the general Hang Seng, because general Hang Seng is with all companies, right? Whereas for the tech is actually all the Alibabas, the Tencents, the JD, and all these tech companies inside. And of course, during the bad times, they also drop a lot, right? Similar to Nasdaq, right? The movement and the volatility of Nasdaq is always higher than the S&P. Similar to this, the Hang Seng Tech Index is also has also moved up about 70 over percent up, and currently is actually doing its retracement. Yeah, it is actually bound to come. I mean, you can actually also see that even earlier when it was actually going up, right? It is also not going up on the straight line. You see, it goes up, it comes down, it goes up, it moves sideways, it goes up, it moves sideways, it goes up, it comes down a bit. Yeah, but of course, the trend which we always want to see is this kind of trend. But in between, they can have slight different movements. Yeah, the best is of course the sideway movement, where I mean this is actually quite quite potent, and once it is actually going sideways, right? I mean, basically the market makers is actually taking in, accumulating before it sudden pop up. You see here, it sideways pop up, sideways pop up, yeah, come back. Okay, so this is Hang Seng Tech Index. Yeah. So opportunity wise, despite on the US market, you can see some possible opportunities there. But of course, the economic side, that there are still a lot of uncertainties coming in there. So while waiting for that that side to be served, right, you can always move on some of your positions into the China or the Hong Kong market, where the food is already served. Already served, you can actually have it immediately. Yeah. Okay. Okay, so yeah, so this is the Hang Seng Index here, and let's see here. Yeah, you see here also is similar crossing, right? 50 crossing 200. Yeah, 50 crossing 200 for the Hang Seng Tech Index, right? And then Hang Seng here, it has also crossed. Yeah, it has also just crossed here. It has also just crossed here. Yeah. But of course, before it crossed, it also moved up already by 50 over percent, and the other one is 70 over percent. Yeah. So this is actually a safe so-called also a safe zone. If for people who want safe, right, this is a safe zone for you to actually start to trade it up. Yeah. Okay. Okay, so yeah, so I'll just take some minutes to also talk about some of the stocks on our watch list. Apple, okay, Apple here you can actually see Apple is actually announcing on Thursday. In fact, all the big shots are actually announcing on Thursday. So Wednesday, Fed meeting can make or break the market, and then on Thursday, because all the big boys are actually announcing, right, what they this after market. So it's the effects will come on Friday. Yeah. So if they if they miss expectation, if they actually cut forecast, cut estimate, then of course that will actually bring the market down after that on Friday. Yeah, on Friday. So market is going to be a bit volatile. So please take care if you have positions. Make sure it is not too heavy. Even if there is actually a negative impact on your positions, you can still withstand it until it gets out of it. Out of it. Yeah. So Apple, yeah, Apple. We have already added some positions way down here, that is the second positions which we took on Apple when it was trading at about 124, right? The first one, I think we took it at 13 something above here when it was actually sitting somewhere around here. Yeah, here. Second level here. Yeah. So that's why I say we don't take in our positions at one time. We would normally tranche it, although the first tranche price is higher than the second tranche, right, by 10%, right? It's still okay because at the end, when the price moves back up, right, you can see that we are already profitable on both the tranches which we have actually made in our investment. So one tranche here, right, and the price currently is sitting here, right? Yeah. Okay. So that's why I said it did not manage to actually go down further for our third and fourth tranche. Yeah. And of course, if we get it, then of course that will be even better once it actually turns around. Yeah. For stocks which are fundamentally strong, it is okay to buy in when to buy at different tranches, even the price is actually going down. Yeah, because eventually it will get out of whatever um, uh, broad economic problems that the market has, right? And because it's strong, then it will actually make a comeback, and the price can actually move back higher. Yeah. Okay. Tesla, we don't have any positions in Tesla, but of course, after its earnings, right, it actually popped up quite big here. Yeah, after it made its earnings. I don't I don't know whether it is really that great on its earnings, right? I mean, but of course, coming out from Elon, right? I mean, he would how to say, he would even bad things he can actually turn into good things, right? It comes out from his mouth. Yeah, but anyway, this Tesla has gone already almost 70-80% up from its lows here. Yeah. And I think it would actually come back down quite soon. Quite soon. Yesterday already, I think $12, $11 down, right? Probably it will come back down to this level, about $140, depending also if there are any effects coming out from the on Wednesday, right? The overall market, right? If the overall market is actually bearish, right, then of course this would actually drop down quite fast, yeah, because it has gapped up from here to here after earnings. Yeah. So this is Tesla, no positions. Netflix went up too fast, and we actually have some positions in Netflix. We did an iron condor. Within these two range, I think. Yeah, we just need it to actually pop back down to actually close our bear call side. Yeah, we have already closed our bull puts side. We have already closed the bull put, and then we're just waiting for a retracement. That's why I want the market to actually come down. I mean, I don't know whether you want it to go up, but personally, I'm portfolio is still a bit bearish. Yeah, a bit bearish. Okay. Visa, yeah, we spoke about Visa, and in fact, Visa is one of the stocks which we like very much. One which we actually spoke about our personal stock pick, right, in of 2023, right, Visa. Okay. I mean, I think the earnings went also quite well. Then it actually popped up, but we 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 were bearish about this one because of the overextended run over here. So we had some bearish positions, which is still running. That's why I said a lot of bearish positions. We just need one slight bad news to actually put all our positions into profits. Okay. Yeah, Mastercard is almost similar to Visa, right? Okay, Baba, we saw it just now. Okay, JD. Okay, JD is actually a sad case. JD is actually a sad case for us. Okay, why is sad case? Because when the price actually pop up, right? When the price actually pop up during this time, right? We sent out a notice for you guys to actually take profit, because before that we actually in our newsletter we shared our trade, right? We shared our trade with you guys, and I'm not sure whether you guys actually taken the trade, but when it pop, we send a note out to say, okay, you can actually take profit here. Okay, and for us, we also wanted to actually take profit during this time, but of course the price which we actually put to close the positions, I think that time we wanted to close it at uh, $9 or something. Okay, we was just $30 more lah, $30 more to our closing price. We left it there, and and we did not reach that limit price. And of course, after that, the how to say, the stock actually came all the way down. And of course, we got a second chance here. We got a second chance here. uh okay, we did not also close it, because we were actually looking at again coming to this level, right? Just a little more, and again after that, I think for the past 2 days it actually came back down. Okay, so of course this teaches us a lesson lah. I mean, sometimes it does not, how to say, it does not make sense, or it's not worth it, right, for you to actually try just to make $30 more, when your positions is already thousands of dollars in profit. Okay, you just want another $30, but the thing is already thousand over dollars in profit. So the lesson is just close one eye, close it. If the target is reached, just close it, and don't be too greedy until you lose the thousand just to make the 30, right? Yeah. Okay, but anyway, like we said, the positions, which the strategy which we have actually entered in here is actually quite safe lah, quite safe, because when we did this, we had actually two short puts, right? Two short puts somewhere below here. I forgot it's what was 40 over dollars, or $50, right? So we had two short puts and a call. We had two short puts and a long call, right? Okay. So of course the long call is actually losing money because of the time decay, right? Time decay. The decay since the position was actually entered somewhere here. But the short put is actually how to say, making money. Like the decay is actually covering some of the losses up here. So the position is not that bad. I mean, you don't lose money, but of course, we just need it to actually just go back up to exit, and we need to actually monitor the time which we actually have left, which is basically another 2 months. Yeah. So when we entered this trade, we already said we need to give sufficient time for it to pop, right? So we did a 3 months trade. Yeah, 3 months long trade. Yeah. So hopefully the China retracement will not be the market retracement will not be too long. Maybe take a week, and after that, the interest on FOMO and all comes back in for the shares to actually pop back up. Yeah. Okay. Yeah. So today is, you see, is still continuing to actually go down, pre market, $59, 870 or 80 cents down. Yeah. But it's okay. We need to actually see. I think it will probably go down to this level somewhere here. Yeah. Somewhere around here. Yeah, 58 50. Yeah, it's 58 58 50 58. Yeah. So of course, again, if the price comes down to certain levels, right? If it really comes down to levels like these, right, then of course again there may be additional opportunities for new trade entries. Yeah, besides the old one, you can always look at new entries to actually go in. Yeah, how to trade. Yeah, just go and check out our newsletter. I think we issued this with our Quick Bites newsletter. Yeah, we have two newsletter. One is the weekly options trading newsletter, and the other one is actually the Quick Bites. The Quick Bites are the ones which we actually lay out some of the trades which we have actually done, or trades which we have actually identified, potential trades which we have actually identified and have not entered. Yep. So do subscribe to Quick Bites, and as and when we actually issue that, then of course you can actually have a reference or guidance to actually learn. Yeah. Okay. So what else? Yeah, CME, CME, yeah, CME is another stock. We have exited our bull put spread, right? Bull put spread with max profit for this trade. We yeah, and of course now level is 17175. Yeah, we when we did it, we was actually somewhere around here, yeah. In fact, I think in some of the trader stock we also mentioned about these stocks uh, for long-term investments. Our positions during when the prices was actually around this level. Yeah. Facebook, yeah, Facebook has gone quite far, way far from its lows of 88. Yeah, from the lows of 88. Okay. In fact, when Facebook actually came down, right? In When Facebook actually came down, I'm still holding a 40 put. Okay, I'm still holding a 40 put for Facebook. Okay, and yeah, 40 put for Facebook. Yeah, I mean, but that of course is a couple of $100, right? But it's still okay. I mean, very safe trade, and basically that couple of $100 is basically free money, right? $40 is somewhere down here, is it? You cannot imagine that Facebook will go down to 40, right? Yeah, but we did a 40 put when Facebook crashed. Okay, so Goldman Sachs has been going up lately. Yesterday, I think it went up about $7 earlier. Yeah, it closed slightly less. Yeah, so this was the support level, and we tried to take on some trades here, but again, trying to save a couple of dollars, right? And we missed the trade for this Goldman Sachs. Yeah. Let it come down again. Let it come down again. If it comes down to this level of 340, right? Yeah, then there is actually potential good support. Yeah, but look at the technical, the price action, and also the candle patterns. Yeah, before you actually enter any trade. Okay, JP Morgan, this is Citibank. The banking stocks are all up. Yeah. Okay, the insurance and the healthcare has been moving sideways lately, sideways lately. But of course, I mean, we tend to like this UNH a lot, right? I tend to like this UNH a lot. Okay, so currently we did a swing trade position on this. We did a swing trade position on this. Yeah, and waiting for it to actually go back up. Yeah, because you can see that it's trading all the way sideways here at this price level about 480 between 480 and 485. Yeah. Okay, if it comes down further, then of course again possible trade entry, because the lowest is about here. 475. Yeah, 475 is actually the lowest it came. Yeah, overall the trend for this is actually all the way up, despite in a bear market. So until here it trades sideways at a big range. Okay. So Amazon, yeah, Amazon, yep, Amazon here. Amazon announcing Thursday, yeah, Thursday. I think it's facing some resistance at about this level here, this level here. Yep, this level here. Yeah, you can see once it hit, this was Friday, right? Yeah, Friday. Yeah, once it hits here, right? Yeah, then it came down. But once if it can reach up, right, then it will move very quickly back up here. Yeah, you can see this. This is again one gap, one big gap here. Yeah. SoFi popped yesterday because of good earnings. Yeah, SoFi way down 420. Now it's about six over dollars. Yeah, these are, I mean, this all these SoFi, Palantir, and all this, right? These are uh, the 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 stocks which the so-called I won't say meme, in a way meme stocks lah, good meme stocks lah, good meme stocks lah. Okay, which has actually taken a big hit, right? Big hit, and of course, again, the downside risk against the upside is actually very little downside, very a lot of upsides. These are all speculative trades if you actually want to do it. Yeah. Okay. Uh, Nike trending sideways. Yeah, we just cover a few more, then we will finish off here. Okay, Nike moving sideways, yeah, moving sideways, and with the Chinese stocks all coming down, hopefully it will come down more, yeah, come down more. Then of course, that's when you can see whether there's actually any potential trade to actually trade it back up. Yeah. Okay. All right. I think that's about it, lah. I mean, unless you guys have any stocks which you want me to cover. If not, then I think I think we have done quite a lot today. Quite a lot today. Yeah. Just to, I mean, at the end, what I share here, right? What I share here is not, I mean, to recommend any stocks or anything. Is basically just to have a glance at the price patterns, price trends, and basically just see how we actually look at the stocks, look at what the resistance levels are, where the supports are, and basically from there put in how to say an expectation of where the stocks can actually go, and based on that uh, use a certain type of options trading strategy, right? That is actually safe and can also give you some so-called security. Yeah, security. I always love security. Like, I mean, if you ask me to buy a straight call, right? If you always ask me to buy a straight call, however bullish I am, right? I mean, I tend to hesitate a bit to buy a straight call. But if you ask me to buy a straight call, and at the same time sell a put, right? I'm okay to do it. Yeah, I'm okay to do it. Yeah, because that put is my security, and that put is also financing my call, right? Financing my call. And if you do a full, and if you're so bullish, and if you do a full synthetic, right? If you do a full synthetic stock, which basically you buy a call at the same strike price as you sell a put, right? Then basically that is actually a synthetic stock, right? Uh, that represents 100 shares lah, 100 shares. Then of course that is the most bullish option strategy which you can actually do, right? Yeah. But only if you are very certain that the shares will actually pop lah. You actually do a synthetic, or alternatively, sometimes nowadays lah. You say nowadays, I tend to actually do those type of strategies on not on the intraday trading lah. That means basically on that day itself, I would open the position using those strategies. Okay, when I see the price would have actually bottomed and the trend has actually changed, I use those strategies to actually how to say to say, take a quick reversal or quick pop in the price, and then I exit. I exit immediately. Yeah, exit immediately. I don't tend to carry those type of trade over for more than a few days. Sometimes the next 1 or 2 days, I will also exit those very bullish type of option strategies which I've used. And I think we have also shared that sometime early January, we also did that on Apple, right? Apple. We did in and out, and we also shared that in our quick bites newsletter. Okay. Okay, so where now? Wednesday, Fed rate hike. Yeah, watch out for it. And then on Friday is actually the what is that? Non-farm payroll. In fact, I think today is ADP non-farm. Okay, give you a gauge of what you can actually expect coming on Friday. It won't be much difference. Yeah, it won't be much difference, but give you a gauge on the non-farm payroll. Friday non-farm, tomorrow Fed rate, but it is 2 a.m. I think 2 a.m. if not mistaken, 2 or 3 a.m. Yeah. So if you are not staying so late, right? So just close your trades and go to sleep. Otherwise, wait for the market to present itself, whether you will see a golden crossing on Thursday, or whether the gaps between the golden crossing is actually moving far apart. Yeah. Okay, so I'll catch up with you guys next time, and all the best in your trading week. Bye bye.